Ever wondered what happens to those little dividend payouts when you're investing through a platform like StashAway? Do they just sit there, or do they get put back to work? That's what we're diving into today. Because let's be honest, understanding how your money is handled, especially those seemingly small but impactful dividends, is crucial for any investor, whether you're just starting out or you've been in the game for a while. We all know the power of compounding. It's like planting a seed and watching it grow into a mighty tree. But for that tree to really flourish, those dividends need to be reinvested. So, the burning question, does StashAway automatically reinvest dividends? The short answer is yes, absolutely. StashAway is designed to automatically reinvest dividends generated by the underlying ETFs within your portfolios. This is a key feature that contributes to the long-term growth potential of your investments. Think of it as StashAway's way of maximizing the compounding effect, ensuring your money is constantly working for you. Now, why is this important? Well, imagine you're receiving dividends, but they're just sitting idle. That's missed potential. By reinvesting, you're essentially buying more shares of the ETFs, which then generate more dividends, and so on. This snowball effect is what makes long-term investing so powerful. StashAway's approach is particularly beneficial because it takes the hassle out of manually reinvesting. You don't have to worry about tracking dividend payouts and then deciding when and how to reinvest them. The platform handles it all seamlessly, allowing you to stay hands-off and focus on your broader financial goals. Furthermore, this automatic reinvestment aligns with StashAway's overall philosophy of building diversified, long-term portfolios. They understand that consistent, disciplined investing, including the reinvestment of dividends, is essential for achieving sustainable growth. It's also important to note that this reinvestment happens within your existing asset allocation. StashAway's algorithm, powered by ERAA, Economic Regime-Based Asset Allocation, continuously monitors market conditions and rebalances your portfolio to maintain your target risk profile. So, when dividends are reinvested, they're allocated according to your personalized strategy, ensuring you stay on track. This process ensures that your portfolio is not only growing, but also staying aligned with your risk tolerance and investment objectives. In essence, StashAway is optimizing your returns by leveraging the power of compounding and maintaining your desired asset allocation. So, to recap, yes, StashAway does reinvest dividends automatically, and this is a crucial factor in maximizing the long-term growth of your investments. It's a key feature that allows you to benefit from the power of compounding without the need for manual intervention. With said, thanks for watching, and until next time.